Ladies and gentlemen, a good time here. Count down. 10, 9, 8, 7, 6, 5, 4, 3, 2.
Good morning, everybody, and welcome to Grayscale's Deeper Dive into Stacks. Thank you for joining us. We are fortunate enough to be joined by Munib Ali, the co-founder of Stacks. And again, taking a step back, we have fired these deeper dives back up to help investors learn more about the about the protocols underlying our products and to help make them more tangible for investors. So before we kick off, I'm going to be reading some disclaimers and I'm going to go through a couple of administrative things. Bear with me for a few moments. This call is for informational purposes only and is not intended to be, nor should it be construed or used as investment, tax, or legal advice, an investment recommendation, an IRA provider recommendation, or an offer to sell or the solicitation of an offer to buy any digital asset or security. Clients of Grayscale may maintain positions in the digital assets discussed on this call. Any opinions expressed throughout this webinar are solely our own and do not necessarily express the views or opinions of Grayscale or any of its affiliated entities. Questions. We are taking questions on something called Slido, which is actually pretty fun. You can scan the QR code that is on the screen, kind of in front of my body, and you can go to slido.com and type in hashtag deeper dive stacks to join the event. We also have some more content on Slido. So if you want educational content around stacks, you can also get that on Slido. So with that, let's kick it off. Let's turn it over to Munib. Why don't you just give us a little bit of background, Munib, on who you are?
Awesome. First of all, thanks for having me. I'll dive into my background, but I feel like I should give like a quick disclaimer myself here as well. So basically, I think Stacks is a very decentralized ecosystem. My day job is I'm the CEO of Trust Machines, which is a company that is building in the Stacks ecosystem, but broader Bitcoin ecosystem really. So both L1 and L2. I co-created the Stacks protocol. I'm an individual contributor, but think of this as I'm not here in any other capacity, but just the individual who is actually contributing to the Stacks open source protocol. It's a decentralized ecosystem. The ecosystem does what it does. I'm just one person who's here, sort of like informing mostly like public information. Like most of the stuff that I'll talk about is already public. It's already like out there in GitHub and other places. So with that, I can dive into some background on myself. So I'm an engineer at heart. I did my PhD at Princeton in computer science, and I've been in Bitcoin for around like 11 years now. And Stacks is sort of like my main way of trying to contribute to take Bitcoin to 1 billion people.
Great. So with that, I think this is a lot of people are saying now we're kind of in a Bitcoin renaissance. It has this opportunity now. It's transcended beyond just being a peer-to-peer currency potentially, and people are building on Bitcoin. And we know that Bitcoin is the oldest, largest, and most secure blockchain, but it's been notoriously slow. It's been difficult to build on. How does Stacks change that?
Yes. So I think the thing that people need to understand about Bitcoin is my mental model is to separate BTC, the asset, from Bitcoin, the rails, or Bitcoin, the technology, right? So the Bitcoin network, the base layer, what we call the L1, like layer one, it's actually designed in a certain way to be very simple, to be very durable, and basically maintain the base properties of Bitcoin. Right, 21 million supply, which is never going to change, and it's mostly like cold storage, right? Like Bitcoin is not really meant for active use, even for payments, I think, at the base layer. like think of this way, that not even like 100 million or 200 million people can use Bitcoin at the base layer, right? Like you just, the network is just not going to scale, and for good reason. So the vision, I think, has always been that there are going to be these layer twos, the L2s, on top of Bitcoin, where most of the user activity is going to be, right? So Lightning is a L2, Stacks is a L2. There are a bunch of others as well. They have different designs. And I think it's the L2s that are going to take Bitcoin to 1 billion plus people, where people can actively use it, actively deploy it, even for simple payments like Lightning, or for much more complicated use cases that we have seen on Ethereum or Solana and other things. So going back to our mental model of BTC asset, so a Bitcoin ETF would give you exposure to BTC asset, right? But if you are looking at the rapidly growing space of Bitcoin, the technology, or Bitcoin, the rails on which BTC is going to become productive or is going to get used in smart contracts, that's Bitcoin L2s. And Stacks is effectively the leading project, like by far, in terms of like market cap or other metrics that we can get into in the Bitcoin L2 space.
So scaling is important. How come there hasn't been a lot of adoption historically of the L2s that exist for Bitcoin? For instance, like Lightning or Counterparty. What's different now?
Yes, I think that's a great question. So I would say that the reasons are mostly historical and not technical. Basically, if you dig back a little bit, there was a lot of innovation on top of Bitcoin back in the days, right? So I started in around 2013. Most of the interesting concepts that people use these days were actually invented on Bitcoin. Like stable coins is probably like the biggest use case that we have seen in the crypto industry. And stablecoins started on Bitcoin. Tether issued Omni on OmniLayer, which was on Bitcoin L1. NFTs started on Bitcoin with Counterparty. ICOs in a way with colored coins started on Bitcoin. So there was a culture of innovation with Bitcoin. And I think 2017 was a very sort of like interesting year for Bitcoin, where this civil war happened, where there were people in two different camps. Some wanted to change Bitcoin base layer, some didn't. I was in the camp that you shouldn't change the base layer. You should actually build on top on L2s. And I think after the civil war, the result was that most of the developers who wanted to build interesting things, they sort of like left, right? And they left to Ethereum, and then later on to other projects. And Bitcoin went through this like dark ages. There were obviously like small pockets of developers, us included, who sort of believe that Bitcoin is the largest network, and this is where most of the innovation is going to come back to, and this is the biggest network to build on top of. But I think overall in the industry, for historical reasons, for cultural reasons, I think the developer momentum on Bitcoin actually frizzled down a lot. And due to the efforts of projects like Stacks and Lightning and others, I think there is a revival, and people are slowly trying to basically realizing that Bitcoin is the most important, largest network to build on top of. And yes, there are some technical reasons as well. The developer tools weren't that good, and some of the work that people in our ecosystem has done has helped sort of like smoothen that over. But overall, I think it's sort of like a mind shift, right? Like a developer mindset. Like people are sort of like rediscovering Bitcoin, and they're going like, oh wow, this is by far the largest opportunity in this industry, north of $1 trillion asset that's just sitting there. And I think people can come and start building on top of it.
And that's really interesting. I bet a lot of people may be surprised to hear that in its early days, Bitcoin did have things like NFTs. And so you might have answered this a little bit, but to play devil's advocate and sort of belabor the point, why would I build on Bitcoin and not Ethereum? Why do we need layer twos on Bitcoin?
Yes, so I think that's a very, very, very important question. So I would say the first and most obvious thing is, if you believe in BTC as money and Bitcoin as the pristine asset, then that's the obvious answer, right? It's north of $1 trillion, which is effectively just sitting there. If you compare this to Ethereum, I think Ethereum is what, 400 billion, something around that number of capital, and 35% or close to that is actively deployed, right? And if you look at Bitcoin, north of $1 trillion asset, and I think not even 1% of it is actively deployed. So it's a huge opportunity for basically capital that just passively sitting there, It's not been actively used. It's not being deployed in productive ways and earning yields or backing, stable coins or liquidity pools and so on. So I think that's a massive opportunity. The second thing is Bitcoin's security and Bitcoin's durability, right? But we all know Bitcoin is by far the most secure, most decentralized network out there. And the way, like for example, the Stacks L2, there's a massive upgrade that is happening in the next couple of months. Part one of that is already live. Part two is happening in a few months, where the Stacks L2 will inherit 100% of Bitcoin hash power security. Now think of it this way: if someone wanted to start a separate network, be it Solana or Avalanche or anything else, they're sort of like bootstrapping their own security, right? Like Solana might be backed by whatever proof of stake security that they have, but a Bitcoin L2 can inherit 100% of Bitcoin hash power security on day one, right? That's insane. Like the way to think about this is, if you're doing a BTC payment or even a stablecoin payment on an L2, let's actually take a stablecoin payment as an example. A lot of these stablecoin payments happen on networks like Tron or others right now, and they have their own security, they have their own security model. But I think most people would agree that that's not as secure as Bitcoin, right? But if you do a stablecoin transaction on Stacks after the Nakamoto upgrade, as soon as your transaction gets like one Bitcoin confirmation, it is 100% Bitcoin hash power and Bitcoin finality. For someone to reverse that transaction, they will have to go and attack the Bitcoin network. And I think that's massive in terms of securing these applications, securing these transactions, and an entire economy that can be built on top of Bitcoin with using BTC in these L2s.
And that's great context, because it's almost like saying all that security, if you don't do this, is in a way kind of going to go to waste. Okay, so this is my favorite part. Let's take a big step back. What exactly, now that we have the context, what exactly is Stacks? How does it work? Can you explain it to me as though I were a 5-year-old?
Yes. So I think the way to, I'll give two sort of like separate descriptions. One description is for people who understand what Ethereum is or what Solana is, right? So if you understand what Ethereum is or Solana is, there are smart contract platforms. Developers can come and program pretty much anything on top. You can't do that on Bitcoin L1. It is simple and for good reason, right? It's a very simple, very durable network focused on the money use case of BTC. So Stacks is L2 on top of Bitcoin, which is effectively like an Ethereum or a Solana, right? It's fully programmable. Developers can come in and they can program anything that they want on top. And interestingly, because it's an L2, the focus is on making BTC productive, right? So there's a way to transfer BTC from the L1 to the L2 and then deploy that capital into the applications, right? So if you sort of like understand what Ethereum or Solana is, that's the way to understand it. It's kind of like Solana on Bitcoin, right? Like where BTC is the main asset, right? So people will be able to transact with BTC, deploy it into applications, whatever they want to do. And I think that's a very, very interesting opportunity for developers to come in and build these applications. So if you don't understand what Ethereum or Solana is, then think of this way: that imagine sort of like on the internet, there is some, people have some vague idea of like, there's some internet plumbing that they don't know about. But people understand what applications on the internet are, right? People know what Facebook is. People know what Google is. So what Stacks really does is that if you look at Bitcoin as the base level plumbing of this sort of like new era internet, Stacks is the thing that enables the applications, right? So people can come and build the Facebook or a Google like on top of it, where BTC is basically everywhere, right? So that's the way I think about it.
That is a great explanation. That is very helpful. So who is using Stacks today, and how does that change in the next 3, 5, 10, whatever years from now?
Yeah, so I think the Stacks project has started around late 2017. Basically we felt the pain of the Bitcoin L1 not scaling, and it was like crystal clear back in 2017 that you'll have to sort of like build L2s. The mainnet launch was early 2021. So there's a current version of Stacks, and it is sort of like slow like Bitcoin. You know how Bitcoin has 10 to 40-minute block times. It's also very decentralized, like Bitcoin, which also means that the network capacity is sort of limited. And in terms of like users, we have an extremely sort of enthusiastic both community of users, but also developers as well, right? So they're building all sorts of things. They're building decentralized exchanges. They're building liquidity pools, lending protocols. They're building like restaking protocols, and so on. And there's a very, very enthusiastic sort of like NFT community as well, because everything that is issued on the Stacks L2 automatically gets secured by the L1, right? So if you issue an NFT on the L2, you're sort of like automatically securing it on the L1. So I think this community is basically a mix of people who love Bitcoin but they love the new interesting things, right? Like they are remixing NFTs or music stuff. They're coming in. They're actively using some of the lending protocols, some of the other more complicated DeFi primitives that are emerging. But in the grand scheme of things, I still consider that community to be small because the major upgrade called the Nakamoto upgrade isn't there yet. And what the Nakamoto upgrade really does is three things. Two of them are sort of like more important to users. One is that it makes the L2 extremely fast compared to what it is today. And I think that's extremely important for Bitcoin UX because people are now used to using Solana or Ethereum, which are much faster networks than Bitcoin. If you're a user and you're waiting for 10 to 40 minutes for a single transaction, you're sort of like pulling your hair, right? Like this is not the user experience you want. And I think Stacks solves that, not just for Stacks L2, but the important thing is it solves that for Bitcoin UX. I think most people will be using BTC on L2s, where it's fast, just a few seconds, you get a confirmation, and your payment sort of like goes through very, very reliably. And I think Bitcoin is never going to do that at the L1 level. So I see Stacks as a critical UX solution for making Bitcoin usage very normal and very fast, cheap, fast for normal users. So that's one thing. The Nakamoto upgrade is a massive speed boost for the Stacks L2. And the second thing is it enables people to easily move BTC from L1 to L2. And I think there are a bunch of wallets out there, like Leather is one of them, where the UX for users is going to be that in their account they see Bitcoin on the L1, which most people would start thinking of that as like cold storage. If I want to like securely just keep my Bitcoin and not actively use them, I'll keep them on the L1. But the L2 is more like a hot wallet, right? If I want to actively use it, I want to go buy some NFTs, I want to go and maybe borrow against my Bitcoin or do anything really with Bitcoin, I will first move it to the L2 where it's fast and cheap, and then I'll actively use it over there. So I think those are sort of like the things that I'm really looking forward to, because frankly, I don't think people have seen that user experience for Bitcoin yet. There are these other networks where the UX is better, but then it's not Bitcoin. It's not the largest asset. It's not the thing that everyone wants.
So when it's all said and done, there's a potential to have really the best of both worlds.
That's right.
Really exciting.
Yeah, this is actually very interesting that, back in the old days of our industry, like I'm talking about 2013, 2014, this exact problem of sort of like having this programmability and fast speeds and other benefits, but for BTC was always called the holy grail problem, right? Like people were like, if anyone can solve this, that would just mean that you don't need other networks anymore. Yes, they can exist and they can be experiments, but once those experiments mature, all the things that are actually working in the industry, they would just get implemented on top of Bitcoin and with BTC as the asset. I think it was always the holy grail problem. And I think people have sort of like, tried working on it for a while. And I think finally we're getting there. But with Stacks sort of like leading the charge, but there are a bunch of other L2s that are coming up as well.
So this is great. I like to draw pictures and look at things. So I'm not going to make you draw a picture. However, is there some kind of demo or something that you can do that might help people who are more visual learners like me start to wrap their head around Stacks?
Yeah, I think if screen sharing is easy, I'm happy to do that. Maybe the best way would be you go to the Explorer for Stacks. that sort of like visualizes that, hey, when a Bitcoin block comes, all of your transactions that happened on the L2, you can actually, they're actually getting secured by the L1, right? So all of those transactions are literally going into the Bitcoin blocks.
Okay, great. So why don't we just let people do that on their own? We can, drop a link in the chat or in Slido for people, and they can check it out. Let's talk about, I want to talk about the token. Where does the token fit in? How is it used? How should we think about it as an asset? And if there's anything you can tell us about the supply mechanism, tokenomics, I would love to discuss any and all of that.
Yes. So I think the way to think about this is that the STX token is really incentives for people to run the L2 infrastructure in an open, decentralized way. That's basically what the STX token is there for. And sometimes, especially in the Bitcoin circle, people ask the question that, hey, why is there a token? And the very simple answer is, if you don't have a token, you can have a federation. For example, Liquid by Blockstream is a federation, doesn't have a token, but then over there, you are completely trusting a group of companies, mostly Blockstream and a few other partners. Whenever you transfer your BTC over to Liquid, you're trusting them because they're running a multi-sig, and you're absolutely sort of like handing over your Bitcoin to them. Whenever you're building an application or doing any transaction on Liquid, you're trusting that company or a group of companies to run everything for you. And then it's unclear what incentives do they have to run that network. Are they actually making money? Will they be around like 10 years from now or not? Right? That's a federation. If you have a token like STX, then it's a decentralized open network, meaning anyone in the world has incentives to come in and run the infrastructure. So it's an open network, right? If a couple of people in the US, for example, they shut down their miners or their nodes, the network will still keep running because someone in some other country is willing to come in and sort of like, run the network and run the nodes. So that's the sort of like simple way of thinking about it. And similarly, a very important point is the movement of BTC. When Bitcoin goes from L1 to L2, like with the current opcodes in Bitcoin, it's hard to sort of like implement that in a way that is fully trustless. We might get that in the coming years if we are willing to make some changes to Bitcoin. But changes to Bitcoin don't happen very often. It usually takes a very long time. So you can almost imagine that a Bitcoin economy on L2s is likely going to be in billions, maybe tens of billions or hundreds of billions as well. You're never going to trust a single company or a group of companies with all that capital. You're not going to just transfer that capital to a company. That capital can only be in a decentralized network where there are multiple signers, they have their incentives, and it works in an open, permissionless way. So I think that's where the token comes in, and that's why the token is important. And this project is also sort of like unique and probably worth mentioning that the token was launched through a SEC qualified offering in the US. So which means that, the original people, including myself, who sort of like worked on it, they really wanted to comply with rules and regulations in the US as much as possible. And it also resulted in a lot of like basically public disclosures and a lot of transparency as well. So people can go look at the original SEC filing, how the project was launched. They can look at the supply, and I think in a way it's a very unique project because I'm not aware of any other major project that has actually gone through that level of scrutiny and that level of kind of like rigorous legal frameworks being behind their launch.
Well, that is, I feel the same way. And as at Grayscale, bringing things further into the regulatory perimeter is something that is near and dear to our hearts. So how do we think about how many Stacks tokens are out there today? How does that change? What does the supply schedule look like? Does it look like any other tokens that we might be familiar with?
Yes. So I think Stacks, one thing that stands out is most of the tokens are already liquid, right? So there aren't lockups. They're also because there was the SEC qualified offering, the flip side of that is the project had to decentralize a lot very, very early on in its life, like even before the mainnet launch happened. So there aren't like large treasuries. Like you might see certain tokens out there, I won't take names, but they're sitting on like 50% of the tokens are in a treasury somewhere, right? Or they're trading at a 20 billion fully diluted market cap, but only 2 billion is liquid. So people know that there are huge lockups or huge parties with very large treasuries that can sort of like come in and sell on the market. Stacks is not like that. It's very organic. Not a lot of people are sitting on large supplies of it, and the fully diluted market cap and the actual market cap are pretty much the same thing, right? So the only new issuance is through mining, right? In which there is a preset schedule. Everyone knows what the supply is going to be by year 2050, and mining is sort of like the only way new tokens are entering. And there's a history of that as well. People can look at the previous years, that how mining has historically been working. So if Stacks is trading at a, I don't know, 3 billion or something market cap today, the fully diluted valuation is also 3 billion something, right? Like it's not a 20 billion fully diluted market cap and only 3 billion is liquid. Everything's pretty much liquid, which I think is interesting. One other thing I would point out, just like, you know, the SEC qualified offering is a very unique aspect of the project. Another probably even more unique aspect, and something that the community really loves, is that if you are helping secure the network by participating as a validator on the network, you lock up your STX and then you earn a BTC yield, which is super interesting, right? It's the only asset where the yield is L1 Bitcoin, and people love earning Bitcoin. I think these days maybe the rate on the network is around 6%, and everyone that I know personally, like they love this product. Like even during the bear market, I think the rate at which people were participating in this were insane. And I think this year, looking at the current prices, I think approximate maybe $250 million in BTC will go out as rewards to people, which is a very strong incentive for people to come in and sort of like, you know, use STX and become a validator on the network and help the security of the network.
That's very helpful. Thank you. I want to talk a little bit about building on Stacks. What are the types of decentralized applications that you think are ideal for deployment? You mentioned NFTs before. What do you think is the best use case for building?
I think my mental model here is that Ethereum, for example, deserves a lot of credit for enabling a lot of early experimentation. So a lot of DeFi primitives, for example, they emerged in Ethereum. And then if you look at Solana, that's gaining a lot of traction and momentum, maybe even relative to Ethereum these days. What happened with Solana was people were like, okay, we understand what the primitives are that are working. People love stable coins. People want to borrow against their crypto capital. There are these like basic primitives that are working. And Solana came in and said, we will just give people much faster rails. Like, yes, Solana has other things as well, but let's just focus on one property that is going to be extremely fast. So same DeFi primitives, but extremely fast. And that sort of like worked really well. People are like, yeah, I like to use this stuff, but on really fast rails. And I think in some ways, Stacks is also very simple. Stacks is saying, take the DeFi primitives that are working and the DeFi economy that's sort of like thriving, but just do that with BTC on fast rails, right? The capital that everyone loves, the capital that is the largest out there, right? So in terms of thinking that, hey, what are developers going to do? I think it's actually very basic. It's very simple. They're going to take all the stuff that's actually working on Ethereum, working on Solana, and just build it with BTC. Obviously, they're going to remix things. They're going to come up with, Bitcoin usually has its own way of doing things as well. And sometimes that's very exciting. But I think at the base level, it's everything that's working in this industry, but with BTC.
That makes a lot of sense. Okay, so based on developer studies, you've seen a lot of growth in the developer community. What are the main drivers that's kind of bringing them to this ecosystem?
Yes, so I think in terms of developer growth, I think Lightning and Stacks are sort of like the two projects that end up on reports like the Electric Capital report and so on. And maybe it's interesting to compare them a little bit as well. I think a lot more people are familiar with Lightning than Stacks in general. So Lightning is actually a very simple network. It's mostly for payments, right? It also doesn't have any token or incentives or anything like that, right? It's relatively very simple. in terms of stacks, stacks can do anything that Solana can do or Ethereum can do, which means it is much more complicated. And then, yes, it has STX, the token, as incentives as well for sort of like securing that layer. And then I think in terms of developer community, one thing that we have noticed is because the project was so decentralized, the developer community also is very organic, and they sort of like started on their own. They support each other themselves. Everything's open source and public, and sort of like that's how they're building. And I've seen that these projects are also like helping each other a lot. They're sort of plugging into each other. Like for example, there's a liquid staking protocol that launched, which very quickly started participating with some of the dexes that are there, or some of the other liquidity protocols that are there. And there's no sort of like big company in the middle that is trying to facilitate these things. And these are very organic interactions, and that is something that I really enjoy. As I said at the beginning of this, that I'm here as an individual contributor to the project, and it's amazing to see sort of like these organic interactions happening and the community growing.
And I think that's in line with the ethos around crypto that a lot of us are excited about too, is that it's actually decentralized, egalitarian. So that definitely resonates. I think you answered a couple of these. So let's talk about issues with scaling. So obviously scaling is the name of the game. How, like, you aim for high transaction efficiency. What are some problems that may have arisen or that you could see might arise around scaling?
Yes, I think we actually the developers in the Saks community, me included, we actually learned some hard lessons from the first version of Stacks, which is live today. I think of that as more like a legacy system at this point, because for the last 2 years, all the attention has been on the Nakamoto upgrade, which is happening in the next couple of months. But on that legacy system, we were coming from a very Bitcoin side of things. And Bitcoin, by the way, is the most decentralized network out there. It's not the fastest. It's not the place where you can do a million transactions or something. Bitcoin block has like 2,000, 3,000 transactions typically, but it is the most decentralized, right? And that is the one property that no one can take away from Bitcoin. It's the best at that, right? It's the most durable, the most decentralized. I think we were coming from the Bitcoin world, and we built the L2 in a very decentralized way as well, but it had low capacity like Bitcoin. So if Bitcoin does 3,000 transactions, the L2, Stacks L2 does 3,000 transactions, and then it also does it every 10 minutes or 40 minutes, right? And that is a lesson that we learned, that Bitcoin, the L1, absolutely should be that decentralized and be the way it is. But I think the L2s can actually optimize for speed more, right? Because users have an option. They're keeping most of their savings at Bitcoin, right? That's not the use case for the L2. L2 is more like a hot wallet, right? And if they need to have a little more powerful computer to run the L2, that's fine, right? I think because it serves a slightly different purpose. So bringing that sort of mentality to the design of the Nakamoto upgrade actually helped a lot. Again, we don't want to be sort of like on the extreme end of the spectrum and be very centralized. Again, I wouldn't name the projects, but there are certain projects where you need to own like data centers to run these nodes, right? And the nodes cost like $1 million a year or something to run. So the Stacks nodes will still be, you can run them on normal hardware, but they might require more power than running a Bitcoin node, which you can go and run on a small Raspberry Pi, for example. So I think we're trying to strike that balance. To scale Bitcoin to 1 billion users, you have to make trade-offs somewhere. So the L2's design is going to look a little different from the L1 design. I think that's fine, and that's why they complement each other really well. And I think that's sort of like the way to scale Bitcoin.
So let's talk about recent updates, future growth. You guys hosted a community event, or some might call a hackathon. Do you want to talk about that a little bit, and any other notable projects or developments that you think things that you would share publicly that you think are interesting?
Yeah, so I think overall, like one thing that the Stacks community has done really well is they've like slowly educated the broader Bitcoin community and brought a builder's culture to it. which is super interesting. So I wouldn't want to take credit, like all credit for this, but I do think the Stacks ecosystem has been a major force in the change and the revival of building on Bitcoin that you're seeing. And they're in countless ways, right? Like there are new developer-focused conferences that they started. There are new podcasts or new Twitter spaces or organic meetups or even dev tooling and documentation. I think it's countless, like in terms of how many things that originated from the Stacks community and then sort of like flew into the broader Bitcoin ecosystem. Even ordinals, right? Like when it started, some of the early wallets that came in, they came from the Stacks community, some of the early API providers and indexers. So keeping that in mind, I think a broader sort of like ecosystem strategy has been to go to a lot of Bitcoin events or even other conferences and then have side events that are Bitcoin developer focused. And that has been very, very successful. And even after the Nakamoto launch, I think what you would see more of is, flying the Bitcoin flag, hosting Bitcoin hackathons, and being very open to other projects. Like, if people want to come and build on Lightning, they're more than welcome to. If they want to come and build on some other L2, they're more than welcome to. But I think it's basically the idea that developers over here have is that the developer tooling in Stacks is just going to be so much better. The reliability and the speed of the network is just going to be so much better that developers are organically just going to gravitate towards it instead of going elsewhere because they feel so confident in the product itself in terms of how good it is for developers. So I think you'll likely see more of that. In terms of the interesting things that are building, I mentioned some of them before, but I'll name them. One is stacking DAO. So I mentioned the Bitcoin yield that comes, and it's so sort of like, irresistible that a lot of STX capital basically just goes into getting locked and earning that BTC yield. So what stacking DAO enables is actually restaking of STX capital. And they launched and very quickly, crossed like 100 million in TVL. And it's a pretty interesting thing because it opens up the door to potentially other restaking protocols and maybe even Bitcoin restaking. Like right now, Bitcoin is not even deployed anywhere. But I think once it starts getting deployed after Nakamoto launch and other triggers, I think the next step could also be Bitcoin restaking. And we are seeing that there's a ton of interest in the Ethereum world for E3 staking as well. So I think that's an area that I'm personally sort of like actively watching. There are other things like lending protocols. Like imagine in the last cycle we saw BlockFi and Celsius, where they were centralized companies, but still they got a lot of sort of like Bitcoin TVL because people wanted to sort of like lend their Bitcoin out. I think that showed market demand, but I think the tooling wasn't right. Like if you look at Ethereum and other places that had decentralized way of doing lending, they actually survived and thrived during that time as well. Whereas all the centralized players sort of like blew up. So I think in looking forward, especially with potentially another growth phase coming for Bitcoin, I'm very excited about Bitcoin lending. So there's Zest protocol, which is one of the protocols that is built on Stacks, but really focus on BTC lending. Right? So after the Nakamoto upgrade, you might see decentralized way of lending out Bitcoin, which is a very different risk profile. Now, yes, there's still some risk because there's smart contract risk, but at least there's no big company in the middle that could like blow up.
These are exciting. These are exciting times. I think about when I started in the space in 2018, and now we're the things we're talking about here. I'm really excited. And on that note, we're getting close to the end here. So I want to ask. I have one more question, which is going to get folks inspired, and then we'll turn it over to some audience questions. So my last question is what your long-term vision for Stacks is.
Yes, so I think the long-term vision for Stacks actually starts to merge with the long-term vision for Bitcoin, right? I see Stacks as the L2, like the best Bitcoin L2 that helps take Bitcoin to 1 billion users. And I think that starts to merge with the vision for Bitcoin because I strongly believe that BTC is the best money. And I think right now in our industry, the best sort of like rails are being built somewhere else. Right? So there's almost this decision that a lot of new developers or users have to make. They fully understand. I think a lot of people get the idea that Bitcoin is best money. But whenever you want to go and build something, you end up on some other network. So what I would love to see is that these two things merge, like the best money BTC and the best sort of like rails for running things are kind of like the same thing. And I think Stacks can enable that. I think once that happens, that sort of consolidation can actually help mature the entire stack. Like if you look at the internet, back in the day, there were many competing proposals. But once TCP/IP became the standard, which I think is going to be Bitcoin, right? Like Bitcoin is internet money. And when other things basically became standards on top of TCP/IP, that's when I think like so many users started coming in, because people want to go to the internet. They want to go where everybody else is. They don't want to be on fragmented networks and so on. This is the long-term 10+ year thing. I don't think the other networks are going to disappear, but I do think there can be massive consolidation just around Bitcoin because it has such a huge gravitational pull to it.
Well, I'm inspired. Okay, let's turn over to some questions. I think we have time for maybe 1-2 questions. Okay, here's one. I think I might know the answer. Let's see. What is the cost to attack Stacks? Is it the cost to attack Bitcoin itself, the Bitcoin network itself, or is it different?
Yes. So I think there's an answer for what is the cost to attack Stacks, the legacy system, which is live today, but I don't think that's important because of the upgrade that's happening. So I'll just answer after Nakamoto. So after the Nakamoto release, if someone wants to, let's say, reverse a transaction that happened on Stacks, they will have to go and attack Bitcoin, which is a very, very interesting property because we know Bitcoin is by far the most secure network. And I think this is also an interesting property when you're thinking about doing BTC payments on the L2. So if you did the BTC payment on the L2, and let's say you got the fast confirmation, like within 5 seconds, you got a confirmation, and Bitcoin hasn't had a new block yet. So for the time being, until a Bitcoin block comes, there is a Stacks level security, which is similar to, hey, how much capital is signing off on that on the fast block. I think close to $1 billion is locked in Stacks today. In the future, it might be more, but it's very similar to Ethereum or Solana, right? Like the capital locked signs off on the transaction. And I think for most transactions, even if $1 billion signs off on it, I think you're fine. But as soon as a Bitcoin block comes, then it becomes Bitcoin security. And I think if your transaction is more valuable, then you would just wait for a Bitcoin block to come and just follow sort of like Bitcoin security.
So yeah, so in a post-Nakamoto world, you'd have to essentially, you need the same kind of power as you would to attack the Bitcoin network, and that's amazing. That's amazing. Let's see. Okay, so we're at time. I know there's some more questions. For folks who do have questions, you are welcome to write into us, info@grayscale.com, info@grayscale.com. And then thank you so much, Munib, for joining me today. This has been awesome. And thank you, everybody, for dialing in. I hope that everyone has a great weekend.
Thanks so much for having me.